Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin this new week, the Australian dollar staged another challenge on Friday as the greenback slipped from the crucial level of 95.65.75 as the market took a brief look to the top side of the range. After numerous attempts at 71.55.65, the market posted a high of 71.49 before dropping back. It is assessed that while this level was intact, the market should look towards the region of 70.75, and with the base holding beneath there, as you can see, at 70.20.30. It is assessed, though, there are stops accumulating above 71.75 and therefore could see a break above 65 to trigger a move up to where the stops are around 71.95 to 72.05. But at this stage, you can see clearly the market is finding this supply zone heavily defended and no doubt will continue into this week. A very mixed story on Friday with the dollar index slipping from the crucial level of 95.65.75 after posting a high of 81 is the fact that the euro rebounded from 114.32 to 115.34 and ended up posting a bullish outside range day. Now, of course, we still need further confirmation to support this move, but nevertheless, the market has found resistance at 115.35 and is pressuring this level. A clear break above there would see a move back towards that recently failed area, 116 figure 20. No doubt there is bigger stops above there, so keep an eye on that. But, as I mentioned, we do need confirmation from this bullish outside range day. From a technical point, we are not fully supporting this move. So we could see a failed attempt at 115.35 and see a reversal, with the support staying still at 114.35. Well, the dollar yen a little bit mixed. It's had a rejection from the downside as well as the upside over the last 5 trading days. Nevertheless, the market has found a bit of momentum into today's price action and no doubt could see a move to the failed level of 112.75. But overall, could still see the market look back towards the downside. I'm not fully bullish at these levels, but a break above 112.75 would give further scope for a move towards the region of 113.65, but demand still looks likely to be around 111.45. A little bit of a mixed story for the pound also. After recently rejecting the 130.25 level, now looks towards the top side of 132.60, which is still harbouring a very heavy supply zone. But nevertheless, the technical implications aren't that bullish. So that furthermore, we could see further concerns coming out of the Brexit, which could see a bit of a bearish case. The gold outlook, little much has changed there. They're still finding resistance at this stage of 1,234.36. It is noted though that from the broader picture, which is the weekly, the fact is that the market is showing potentially a bullish move and therefore could see a rise up towards the region of 1,250. So keep that in mind. And finishing off with oil is the fact that the market at this stage is still posing a threat to the downside since the break of this pennant. If we do see a further move down, then the potential target looks to 66.70.90 and reassess from there. Resistance at this stage comes in at 69.90 to 70.25. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new week.